Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Good morning, everyone. Happy Friday. It is February 6th, 2026. I'm Alex.
And I'm Morgan. You are listening to Connecting the Dots, the show where we take the chaotic scatter plot of the daily news and draw the lines to show you the bigger picture.
We are coming to you live from the Snarful Solutions Group studios right here in Sacramento.
And looking out the window this morning, we are off to a very, very classic Sacramento start.
Oh, yeah. We've got that patchy valley fog sitting on the ground right now, but the forecast says it's going to burn off by mid-morning. We're looking at a mostly sunny day. High of 68 degrees.
Which is, honestly, it's just rude to talk about considering what the rest of the country is dealing with right now.
I know.
If you're listening to us from the Northeast or the Great Lakes, we are genuinely sorry. There's a serious Arctic cold front tracking across the region.
Yeah, we're talking snow squalls, rapidly falling temperatures.
And damaging wind gusts. The power outage maps are already lighting up in the mid-Atlantic.
So if you're in those zones, please keep your devices charged and stay safe.
And just to round out the map, the Pacific Northwest isn't escaping it either. Rain is returning in force this weekend.
With snow at the higher elevations. So unless you're here in the valley or down south, it's a stay inside and drink coffee kind of weekend.
Speaking of staying inside and watching screens, let's look at the money. It's Friday morning, and the markets are actually holding up surprisingly well.
They are. The Dow Jones is up about 0.5%, trading around 49,287.
The S&P 500 is creeping up too, hovering just above 6,836.
But the real story, as it has been all week, is crypto. If you just glance at the ticker this morning, Bitcoin looks great. It's up about 6.5%, trading around $66,932.
But we have to put a massive asterisk on that green number.
A huge one.
Right. It's a bit of a relief rally. We are still down almost 15% since Monday. It has been a brutal week for anyone holding digital assets.
And we're going to get into exactly why that is happening a little later in the show.
It's been a roller coaster, and honestly, tracking that kind of volatility requires a level of focus I just did not have when I woke up.
Which brings us to our first partner for today's show. If you need the focus to track the market or just the energy to go shovel your driveway, you need to check out Strong Coffee.
I have to admit, I was skeptical when we first got this into the studio because it's instant coffee.
Right.
And usually instant coffee tastes like, it tastes like sadness in hot water.
It really does. But this is different.
It is. Strong Coffee is premium. It genuinely tastes like a traditional slow-brewed cup.
But the kicker isn't just the taste. It's what's inside it. It is packed with 15 grams of protein, MCTs, and, this is my favorite part, adaptogens like ashwagandha.
That's the key. It gives you this really clean, sustained energy. It's not that spike and crash you get from a sugary latte. It is just efficient fuel.
Exactly. If you want to try it, head over to strongcoffeecompany.com. And because you listen to us, you can use the promo code SNARFUL, that is SNARFUL, for 20% off your entire purchase.
All right, let's get into the Morningstar, our Snarful Tech article report. We have 3 massive stories to unpack today.
We're looking at Amazon's record-breaking spending spree, the mechanics behind that crypto crash, and a new AI tool that might just save you from PowerPoint hell.
Let's start with the giant in the room, Amazon. They dropped their Q4 earnings yesterday, and the headline number is just staggering.
$213.4 billion in revenue.
In just the fourth quarter of 2025.
That's an all-time record. They absolutely smashed expectations. And you'd think, hearing that number, investors would be popping champagne.
But they weren't. The stock actually dropped in after-hours trading. So the question is, why? They made more money than ever, but Wall Street is grumpy.
It comes down to one word. CapEx. Capital expenditures.
Right. CEO Andy Jassy came out and effectively told the market, we made a lot of money and now we are going to spend a monumental amount of it.
They are forecasting $200 billion in capital spending for 2026.
$200 billion. Just to put that in perspective for everyone listening, that is roughly the GDP of a country like Greece or New Zealand.
That is the amount of money Amazon is pouring back into the business in a single year.
And that's a 50% increase from last year. Almost all of it is going toward the infrastructure race for artificial intelligence and, of course, AWS, their cloud service.
It's a signal to the market that the AI wars are getting incredibly expensive.
It's basically a high-stakes poker game, and Amazon just shoved a mountain of chips into the middle of the table.
And investors usually hate this in the short term. It eats into profits. They want dividends. They want buybacks.
They do not necessarily want Amazon buying millions of GPUs, but Jassy is saying if we don't spend this now, we lose the future.
And they have the cash to do it because their other business lines are becoming absolute monsters. I mean, look at the ad revenue.
Up 23% to over $21.3 billion. A lot of that is driven by Prime Video.
Which we've all noticed. You can't escape the ads on there now.
No, you can't. They're running ads in 16 countries, reaching 315 million monthly viewers. And the content strategy is clearly working. Thursday Night Football just had its most watched season ever.
Averaging 15 million viewers.
Yeah. And there's also a really interesting side note in the report about their content. They're getting into political documentaries, specifically that Melania documentary from Amazon MGM Studios.
Right. This followed the lead up to the inauguration.
It did,
For a documentary. It made about $7 million on its opening weekend.
But, and this is the fascinating part, purely from a financial standpoint, it cost them $40 million to acquire the rights.
And another $35 million to market it.
Yeah.
So, doing the quick math there, that is definitely not a profit center.
No, it's a loss leader, but it shows they're willing to spend big, even overpay for exclusive content that keeps people locked into the Prime ecosystem.
Whether it's football or political docs, the goal is just keep you in the app.
Exactly.
But, speaking of that ecosystem, there's a consumer angle to this $200 billion spend that really stood out to me. Delivery speeds.
Oh, yeah. We all joke about ordering something and having it show up before we even close the app.
Right, but the data backs it up. Speeds hit a record in 2025.
They did. Prime members in the U.S. received 8 billion items the same day or the next day.
Which is a 30% increase year over year. It's a logistical miracle.
It is. But we have to acknowledge the other side of that efficiency equation.
The human cost.
Exactly. While revenue and delivery speeds are at record highs, Amazon is cutting jobs. They just laid off 16,000 employees in corporate roles.
They're calling it reducing layers.
Reducing layers, which is very polite corporate speak for firing middle management.
It is. And that brings recent cuts to around 30,000 people. It's just a stark reminder that in the tech world right now, efficiency often means fewer humans in the loop.
They're trading payroll for compute power, betting on automation and AI over headcount.
Which is a heavy transition. But let's pivot to our second story. We mentioned the Bitcoin bounce this morning, but we need to talk about the crash that preceded it.
Bitcoin hit its lowest levels since November 2024 this week, dipping into that $60,000 range.
And to give that context, that's a 50% drop from the peak in October 2025 when it was sitting at around $126,000.
That is a massive amount of value just wiped out in a few months.
So the question everyone is asking is, why? In 2024, the narrative was all about the Trump trade.
Right. The idea was that the new administration would be crypto nirvana,
Right.
Strategic Bitcoin reserves, friendly regulations. What happened?
Well, reality set in. The market is a forward-looking machine. It basically digested those promises last year. It priced them in.
And now traders are looking at the actual macroeconomic reality, and a big part of that reality is the Federal Reserve.
Right. Trump appointed Kevin Warsh to lead the Fed. And Warsh isn't exactly known for loving risky assets, is he?
No, he is not. Warsh is viewed as hawkish. Historically, he favors higher interest rates, tighter money supply to fight inflation.
Okay, so for the listener who doesn't track Fed policy, why is that bad for Bitcoin?
Because high interest rates are basically kryptonite for speculative assets. If
Okay.
you can get a guaranteed safe return in a bank account because rates are high, you are much less likely to gamble on a volatile digital coin.
So when money becomes expensive to borrow, liquidity dries up, and risky assets fall first.
Exactly. But there was another dot to connect here that I found really fascinating. This wasn't just a Bitcoin story, it was a gold story.
And usually people think of those as opposites.
Right. This is where it gets a little technical, but it's really interesting. Gold and silver prices also tanked recently. And when that happens to big institutional traders, it triggers something called a margin call.
Let's break that down. What is a margin call in this context?
Okay, imagine you borrowed money from a broker to buy a huge amount of gold. Suddenly, the price of gold drops. The broker calls you and says, you owe us cash to cover that loss, and you have to pay us right now.
Okay.
You don't have the cash sitting in your account, but you do have Bitcoin. So what do?
You sell the Bitcoin to pay the broker.
Exactly. It was a deleveraging event. Traders were forced to treat Bitcoin like an ATM. They sold their crypto just to pay for the holes in their gold portfolios.
Wow. So it's a reminder that crypto doesn't exist in a vacuum.
Not at all. It's tied to the rest of the financial plumbing, and the splash damage here is wide. It's not just people holding the coin. Look at the companies. Coinbase is down. Robinhood is down.
And Strategy, formerly MicroStrategy, is hurting bad.
Strategy is a huge example. They are currently underwater on their massive Bitcoin holdings. Their average purchase price is actually higher than the current trading price.
That is a scary place to be for a company that has basically leveraged itself to the hilt to be a Bitcoin proxy.
And even the Trump-related ventures took a hit. The World Liberty Financial token was cut in half. The meme coin TrumpRab is down to a fraction of its inauguration price.
It just shows you that momentum trades cut both ways. When the hype cycle breaks, gravity takes over very, very quickly.
So the lesson is, politics can drive hype, but macroeconomics, interest rates, liquidity, the Fed, that usually drives the long-term trend.
Physics wins in the end.
It always does.
All right, let's move to our final story. And this one circles back to that AI theme, but in a way that might actually change your workday.
This is for anyone who has ever stared at a blank PowerPoint slide and just wanted to scream.
Huh. Yes. Anthropic has released a new AI model, Opus 4.6, and they are introducing something called agent teams.
This is a significant shift in how we think about AI. Up until now, most of us use AI like a chatbot. You ask a question, it gives an answer. It's very linear.
Anthropic is changing that metaphor entirely. Instead of hiring a freelancer, you're hiring a department.
That's the perfect analogy. Agent teams allows multiple AI agents to work in parallel. So imagine a complex project. Instead of one AI trying to do steps 1 through 10 in order.
And getting confused halfway through.
Right. You have one agent handling research, another writing code, a third writing documentation, all at the same time, coordinating with each other.
That is wild. And they are saying this beats competitors in terms of autonomy.
In agentic evaluations, which basically tests how well an AI can act on its own, it is beating GPT 5.2. And a big reason is the context window. Opus 4.6 has a 1 million token context window.
Okay, let's unpack 1 million tokens for the non-engineers. What does it matter?
Think of the context window as short-term memory. Most AIs forget what you told them 10 minutes ago if the conversation gets too long. It's like talking to someone with amnesia.
Right, you have to keep reminding them, hey, remember, we are writing a Python script about finance.
Exactly. A 1 million token window is like letting the AI read a stack of huge novels or thousands of lines of code and remember every single detail perfectly while it works.
So it allows for much bigger, more complex projects because it doesn't lose the plot.
Precisely. But here is the part that actually got me excited. They are explicitly targeting knowledge workers now, not just coders. They launched a Claude and PowerPoint plugin.
This is the aha moment for the business world.
It is. You can now build and edit presentations directly inside PowerPoint with Claude. No more generating text in a chat window, copying it, pasting it, fixing the formatting.
You just tell Claude, make a slide about our Q4 revenue growth, and it builds the slide.
It builds the slide. It creates the graph. It aligns the text. It even picks the colors.
That is going to save so many hours of corporate drudgery. It feels like we are finally moving from AI as a toy to AI as a coworker.
That's the trend. We are moving away from chat interfaces and into integrated workflows. The AI becomes invisible, just part of the software you already use.
But connecting back to our first story, if AI can now manage teams of agents and build the slide decks,
it makes you wonder about those layers Amazon is reducing.
It certainly does. The definition of work is changing right in front of us.
If an AI agent can coordinate a project and build the final presentation, what happens to the project manager?
That is the big question for 2026. Before we wrap up and send you off into your weekend, though, we have one more tip for you. We talked about energy with strong coffee, but let's talk comfort.
If you are planning to hit the links this weekend, maybe not on the East Coast, sorry guys, but anywhere else, you need to look at Skony.
Skony is a fantastic sponsor of the show. They make premium golf shoes that don't just look good, they actually feel good. If you're walking 18 holes, your feet will thank you.
And we hooked you up. You can use that same promo code SNARFL at checkout for 15% off your entire purchase. The website is skony.com.
Seriously, upgrade your footwear game. So let's recap the dots we connected today.
First, Amazon. They are proving the AI race is incredibly expensive. $200 billion in CapEx is a number that's hard to even wrap your head around.
But for us consumers, it means faster packages and smarter services, even if the market gets jittery and employees worry about their jobs.
Second, Bitcoin. We saw that political hype has a shelf life, the Trump trade is fading, and the old rules of finance interest rates, liquidity, are back in the driver's seat.
And when gold takes a hit, crypto often feels the pain because of those margin calls.
And finally, Anthropic. We're seeing the evolution of AI from a chatbot to a team of agents. It's getting smarter, it has a better memory, and it's finally coming to the tools we use every day, like PowerPoint.
It's a reminder that technology moves fast. One day you're prompting a chatbot, the next day you're managing a team of AI agents.
And one day you're the manager, and the next day the agent is the manager.
That is a provocative thought to leave you with. We hope this helps you make sense of it all. We're here to help at Snarful, so reach out on our website if you have any more questions.
Have a great weekend, everyone. Stay warm.
See you Monday.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.